3 key ratios for balance sheet analysis. Your business's balance sheet tells an important story. It outlines what your small business owns and owes at a specific point in time. But in order to get the most out of your balance sheet, you need to know how to analyze it. A balance sheet should contain 3 key sections: your assets, your liabilities, shareholders' equity. Once you understand what your company has in these categories, you can use ratios to draw actionable conclusions. Here are 3 key ratios for effective balance sheet analysis. Solvency ratios. These are used to analyze your business's cash, assets, and debt. Through these ratios, you are trying to see if your small business has enough cash and assets to continue functioning successfully. The higher the ratio, the higher your financial strength. A simple formula will show your current ratio. This is your assets that will be converted to cash within 1 year, divided by your liabilities that will be paid within the year, and highlights your business's ability to pay off your short-term debts. Remember, the higher your current ratio is, the better. Debt-equity ratios. These ratios show the amount of financing that comes from investors. If you have a high ratio, it indicates that you used more bank loans than investor financing. Higher ratios can also mean that your company has been using debt to grow, which may not be viewed favorably by investors. To find your ratio, simply divide your debt by the shareholders' equity. For the debt figure, you can use total liabilities or all debt, depending on what you want to analyze. Activity ratios. These ratios measure how effectively your small business converts assets into cash. High ratios here indicate that your inventory is being sold and converted into cash at a fast rate. Days sales outstanding measures how fast your small business converts receivables into cash. A high ratio tells you that you're selling a lot of products or services, but taking a long time collecting your receivables from those sales. The solvency ratios, debt equity ratios, and the activity ratios are just 3 of the many ratios you can use when analyzing your balance sheet. To learn more about balance sheets and analysis ratios, and for more small business resources, visit smallbizahead.com.